Hey traders, this is Blake Morrow with Trader Summit, and it's been a long time since I've had this gentleman on the Trader Summit, so it's great to see you again. Let's introduce and bring him on in, Tommy Lackey. He is the creator of powerinvesting.com. How are you, sir?
Doing great, Blake. How are you doing today?
I'm doing great. You know, it has been a while since we've discussed anything, and actually back in 2002, we were probably in, range bound, slightly down market, but here we are, year and a half later, breaking out, talking at new all-time highs in the S&P as of today. How are you seeing this market and how are you viewing things nowadays?
Well, you accidentally said 2002, so we'll say 2022.
2022. I meant to say 2022. You're right.
Exactly. But in that, basically, I mean, I'm viewing it as at a healthier market than we've seen in a while. And I think it's one of those things that a lot of people, especially since COVID and probably since 2018, when we started getting the wider swings and started getting the velocity picking up in the markets, this is the first time I think we are hopefully starting to see the breadth kind of spread out some. If people want to talk about bear markets and their time periods, we ran through long enough for a bear market to kind of work its way through the system and things like that. So I think it's pretty promising where we are right now. And I'm not, but new highs right here are not something that's scaring me. I think it's a pretty great thing.
And I would not counter your argument. I would agree with you that even this week, on the dip that we saw this week, coming down to the low 4,800s in the S&P, midweek, and really respecting that level, the breakout is holding. We're going to
Correct.
close in breakout territory. So what are you seeing that really jumps out on your screen right now?
Well, I mean, again, it goes back to whether you look through the sector side of things and stuff like that. You've got to realize that technology is leading, and it's not just the big seven. There's a lot of other companies inside technology, the software area, of course, the semiconductor area that everybody's been so hot on. And sure, the biggest names are garnering a ton of attention, but you're seeing a lot more breadth spread out inside those particular names. So it's not just the big ones. Even IT services and hardware within inside technology has started to spread out a good bit and perform. And that's a great thing to see. And that's where really a lot of our earnings are. So whether you think it's extended or not, it's hard to move away from it too far other than trying to play these corrections if you want to try to do that. Once you get outside of technology, I mean, healthcare is in a great position to set up here, especially with the potential for interest rates coming out down some throughout the year. Biotechnology has 230 holdings in my universe of biotechnology, and that's one of the most interest rate sensitive areas of the market and has underperformed for over 2 years until we got into the November drive. What a lot of people have to realize here is that what we saw from November until early January, however you want to put it, were thrusts that are typically initiation thrusts. Those are not typically the end of a run. After what we've been through, those are more like the beginning.
All right. Well, this breakout, as you're talking, really, seems like it may have some legs. So why don't you take us through, what you do at Power Investing, show us some of the charts that you've been looking at and give us a view. Let's see it.
Okay. Share my screen here, and I got to make sure I pick an actual one thing so you don't have to see everything that's there. But this is actually basically the Power Investing website, and it's not the front page. It's right here where you see Power Universe.
Yes.
And when you take a look at this is basically where I start and I build my own universe. This basically all came out of I was a registered investment advisor first, managing clients' money since 1999 or earlier than that, actually. But I got really frustrated with the way institutions and money managers tried to work with advisors during the 2000 to 2003 dot-com bubble, as well as the 2000 to 2000 or 2007 to 9 the financial crisis. And so I picked up the technical analysis side of things. And what I realized I needed to do was figure out a way to break down the markets myself. It's kind of what I do here. And what I do is basically everything's in equal weight. So this particular chart shows it's a universe of 3,000 stocks. I filter it myself. It's filtered every day, and it builds an equal weight index here for me to kind of look and see how things are going. So I don't have to worry or focus all the time on what the top 7 or 8 names are doing. especially if I'm going to be doing more sector work and not just individual stock work. So right now, everything looks like it's pretty strong. If you know my work, you know I'm an RSI person as my momentum type indicator. Again, I use it more as a trend following indicator than I do momentum, unlike most people, but it is where I follow the most and have done the most work. And this is just really a very strong setup for now. We just aren't seeing weakness come in these charts. As I pull down here real quick, I go into the next thing, the same universe, I do all the breadth work on it. And I'm not going to go through all these, but if you go to the site, it's powerinvesting.com, you'll see that all these are your major breadth readings, and it's on my whole universe. I did this because the New York Stock Exchange breadth readings get so messy sometimes. I wanted my own that didn't have a lot of the different proxies in it. And so it gives me a much cleaner look of what actual equities are doing. And so this right here, again, all these are moving up and to the right here. Even the McClellan oscillator or summation here is turning back up after turning down at the end of the year. You know, there's just a lot of things that are showing that even if these large cap mega names slow down, which we haven't quite seen yet, we are finally starting to see some work under the surface as far as broadening out in this particular run.
So you're looking at a whole universe breadth at the moment. When can you, or how can you dig into certain sectors that are moving?
Well, if you go back to the top of the menu page, you can go right over here to sectors. And I do sectors and each subsector, which I have 51 subsectors that I build because the S&P GICs are too small to work with. Some of them only have 2 or 3 names, and you can't really do breadth on 2 or 3 names. But let's take, instead of doing information technology, let's do healthcare. And if we go to the healthcare page, and one thing you'll notice about the site is whether it's the universe, the sectors, or the subsectors, every page looks almost exactly the same. So once you learn to use the system, you can very quickly visually scan through these pages and see what's going on. This right here is the entire healthcare sector in an equal weight chart. And it's
Now,
pretty much right.
Tommy, let me stop you for 1 second. And why do you like to have an equal weight versus, not equal weight, maybe based on market cap? I mean, if you have one industry leader, doesn't that deserve more weighting, or not in your view?
Well, I am certainly going to pay attention to that. And I have other factors on here on what I call my macro page that breaks down in a relative strength manner what is leading, whether growth or value is leading, whether large or small is leading. And so that's on another page. So I look at that first. So sure, if I see that the mega cap growth is what's leading, then I would lean towards an ETF that weighed more towards market cap. If I see things like now where I'm starting to see some of these other areas broaden out, or I think some of those mega caps might be a little extended, I can go with a equal weighted. Or if small caps do start to play catch up, then you have plenty of small cap sector ETFs as well. I've designed this product for 2 levels of professional. One is the ETF, pretty much your regular advisor out there that, in my opinion, should be doing a little bit more than just sticking everything in an S&P fund. But they also don't have the time to do the kind of research you and I do. So I'm trying to set up a system to where they can use some of the sector funds and sector ETFs that are out there, because it's such a wonderful opportunity today. When I started doing this back in 1999, there were literally like 22 sector mutual funds total. Yeah. Right now on my site, I have over 300 sector ETFs from all different sectors. It's just it's like a kid in a candy store as far as the opportunity out there without having to take individual company risk.
Okay, so you're looking at this healthcare, this is the sector. How do you find the names that you're like, I really want to be involved here, and here is the reason why?
Well, and that's something we just recently did. There's a couple ways to do it. Number one, you pull down, you see if you like where the breadth is, things like that. It might not be an entry here now that it's lagging a little bit comparing to some other stuff, but you want to see that pick up. And down here, I do ratio charts versus the S&P and versus other types of indices. And then also this one on the right gives me when the numbers are making new highs, 10-day highs, 21-day highs, and 63-day highs. This is the percentage of components or the percentage of stocks within the sector, subsector, whatever we're looking at. this tells me when there's buying pressure in the area. Now, once I find that, I can go two ways. I can either go here to the healthcare relative strength rankings and choose a subsector to dig deeper in. But here we're going to stick on the sector page and we're going to look down from here. If you're an ETF investor, you have a relative strength ranking of all the ETFs within the healthcare right here. And one of the new things we just put on are filters to where like I could sit here and say, okay, I only want things that have outperformed the S&P 500. And as of, this day, yesterday, the S&P 500 return was 1.2%. I'm just pulling this out of my hat. And so that right there is going to basically sit there and it's going to filter down this particular table to only things that have outperformed or what number I put in there. These little filters, if you have ideas of how you want to choose what you're investing in, give you a great way to slim down this chart and take it from 50 or 60 ETFs down to 5 or 6 that you can then go to the chart and really look closely at. If you're not an ETF guy, if you want to go down to the stock side, every single one of these has every component that's in here is ranked based on my proprietary relative strength rankings. And they're ranked from 0 to 100 based on their performance over the last. This is a 3-month ranking where you can hit the button here and you can look at the 6-month rankings, or you can hit the bucket here and you can have a 12-month RS ranking. It depends on whether you want short-term or long-term. I prefer the short-term because I'm trying to find things early when they're getting ready to turn. And so from that stance, this 3-month RS ranking ranks pretty much every stock in the healthcare sector right now. And then I can filter it in any way I want. I can only look at 90 to 100. I can go over here. My favorite thing is to sort by this RS movers. This is the number of RS points or relative strength points it's moved over the last 5 periods or 1 week. So that tells me where the money is moving into this sector. And then, of course, I'm a chart guy. So the key here is basically everything goes down to looking at the chart. So if I find something I like the number, I click here and it takes me over to Trading View and I can review the chart further from there. So the site is set up to try to help you funnel the markets down as fast as you can to the areas you want and have those areas be very focused into a fishing lane, for lack of a better way to put it.
That makes a ton of sense. Now, you're showing us a breakdown here of that particular sector. Tell me what those colors mean and represent.
Well, again, I'm really visual, and the whole point of this site is allow you to go through it visually as much as you want. And so if you look over here on the relative strength rankings, what you have here, and I'm sorry I pulled that down a little far, is what you have here and what you're looking at is you're looking at basically a ranking of every stock that's here and how it's performed over the last 63 days, how it has performed relative to every other stock that I have in that list. And when I say that list, I mean in this, when it's everything that's in the healthcare, if we look on the semiconductor page, it's just everything that's in the semiconductor subsector. So whatever list you're looking at, the rankings are only including those securities. And so it gives you that opportunity to basically take a look here and start narrowing things down from here. And so 100 ranking is your top, 0 is or 1, I think, is your bottom. And pretty much you can see this is what the ranking was 63 days ago or a quarter ago. This is what it was a month ago or 21 trading days ago. This is what it was a week ago. And this is what it was yesterday's close. And so this visualization allows me to see how it's kind of moved through the rankings right here, MLYS. I haven't looked at the chart, but when I see it move from a 13 to a 43 to an 83 to a 91, I don't have to look at that chart to tell me it might be moving. Now, again, I don't buy a lot of stuff in the 90s. I kind of prefer to go down here in the 50s and 60s because I like things that are starting to make their way up. But I'd probably go down here if I were looking for something new to say maybe a 57. I see it's moved 20 RS points over the last week. It's moved from 37 to 57. So I'm going to click on that chart, and that's when my real research starts.
That makes sense because I mean, if something's at 90 or 100 or it's probably been there. Well, you start to ask how long is it going to stay there?
Right. Well, and that's why you got to start at the universe level. And that's why you got to look at the full level first, because that might be the case in something like technology. But if we're in an area like healthcare, and let's say it was early December after it's underperformed for a couple of years, you probably are looking at the guys that are up at 90 and 100 because that's a sector that's going from a downtrend and turning to an uptrend. So there, your leaders may have moved far, but they might still have a pretty good shot to go. If you look at those charts, a lot of times you find a lot of really long bases kind of in those realms. And so when you launch from a, 8, 12, 15-month base that's after a, 35, 40% downtrend, you can get some pretty heavy movement once the buyers come back.
Yeah, that makes sense too. All right. Well, Tommy, you showed us a lot of how to use power investing, how to use your platform. What charts do you what sectors do you like right now personally, and where's your capital and clients' capital heading?
Okay. Personally, right now, where I'm at is what I said, is I think there's still room in technology, and I think technology is still what I would call a ratcheting sector, which means you still need to be in and out it if you want to try to play these pullbacks if they come. But at the same time, if a lot of institutions were caught underinvested, that pullback may not come as much as you want, and it's not going to be very long. And that's kind of what we've seen. You mentioned that when we started, is that, we've seen these pullbacks so far since the beginning of the year are pretty short and sweet. And that means someone still wants in. So until that changes, that's a message from the market in itself. But when you look outside of that, healthcare is number one, and healthcare has been number one off those lows since basically early December. It took about a month for it to hop up there, but it hopped up there after being at the bottom for quite a while. So healthcare, I think you saw a lot of opportunities in. I mentioned this last weekend, communication services, even did a little extra writing on one of the subsectors inside of their media and entertainment. And obviously we're seeing big moves in there this week. But that was a good example. I mentioned that one, that even with XLC being extended and being one of the strong movers for a while now, you were starting to see the breadth spread out a good bit inside communication services. And so that's what, again, if I'm correct, and I'm wrong a lot, but if I'm right in these moves off the November lows were initiation moves, then we should see much more rotation than we should see pullback.
Well,
So
and rotation in this environment would be good when you have, so many stocks leading the market higher, right? Just like a small handful.
Well, and I think that's I think that's a little bit, that is definitely the case that a small handful are. But at the same time, I resist that because there's a really decent sized group, probably 10 to 15% of the 3,000 stocks, which is 300 plus. That's not really a small handful, that are really moving well. They just aren't a lot of names we know. And there are also some that are bifurcated and really doing terrible in this environment. So that makes it look like, because everybody pulls out that stat that, the equal weight is still down on the year, flat or whatever, and the S&P's up 4 or 5, and the NASDAQ's up this or that. The problem with that is there are another, outside of those big 7 or 8, there's another 25 in there that are really moving. There are just 25 also that are just getting killed and pulling off that average. So I'd be careful saying this is a really narrow market, because I'm not seeing that in my breadth work, and that's kind of what I do every day.
All right. Well, Tommy, I love it that's what you do every day, and you're showing us exactly how you come to that conclusion. But you have some really good news about power investing, your site right now, for anybody that wants to come use it. What's the good news?
Yeah. Basically, the great news is that we've got everything up and running. We're doing a lot of improvements here over the next 6 to 8 weeks. This has been built and designed to be a membership service for mainly professionals and advisors, but we are going to have an area that makes it good sense for individual investors who are pretty active in the market. And basically, we're going to hopefully have that out by the end of the quarter. But until the end of the quarter, we're going to be leaving pretty much everything open. At a minimum, you'll have to give us an email address, but we're going to allow all our reports and all of the site itself to be open for people to peruse, play with, see what we're doing, is give us feedback on what they think could make it better. The goal behind this website is pretty much to base your entire investment process, or at least start it, because you always got to look at the chart, but start it on the basis of relative strength, because there's really no simpler concept of we'd rather be in the strong areas and avoid the weak areas, of course, unless we're shorting. And so by being able to identify that quickly, and we have 4 pillars that do that, it gives you a lot of opportunity to be able to stay away from areas you don't want to and kind of know, like I said earlier, what fishing lanes you want to be involved in and
Well,
why.
Tommy, I appreciate you spending some time with us here at the Traders Summit. And to get more information, they just go to power/invest or power-investing.com. Is that correct?
Yep, go to that. And if you want to get our reports emailed out to you now while we're doing it as a courtesy, basically just at the very bottom there is a place for you to put your email. I don't have a pop-up right now, but right now at the very bottom, you just put it down there and you'll start getting reports this weekend. I'll be doing a macro review. I do a sector review. And then as I get more and deeper into kind of writing these reports, I'm going to be doing a lot more sector and some ETF and individual work.
Well, Tommy, thanks for taking us through this. I look forward to having you here on the Traders Summit again. And all I have to say is Investors Business Daily needs to look out.
Well, I don't think they have too much to worry about right now because they like to go everywhere. My whole goal is to stay focused and keep this site as clean as possible. I don't want it to be something that's a distraction. I want it to be a very useful tool.
Well, thanks for bringing it to us here, and I'll look forward to our next conversation.
Thank you, buddy. Have a great day, Blake. Always good talking to you.
Same here. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.